Welcome back. You're watching Market Sense live on ET now, and for Indian investors there's an option now to go global. Indian investors can now buy NASDAQ ETFs, and the House of Motilal Oswal Securities is planning to launch that. Let's discuss that with Nitin Rakesh, Chief Executive Officer of Motilal Oswal AMC. Nitin, good innovation, but for a market which has already appreciated by about 100% in last 2 years, is it too late to innovate?
Good morning. I think there are two ways to look at it. We've run some numbers based on the growth in the NASDAQ 100 companies' earnings over the last 9 years. There is a compounded growth of 20.5% over the last 9, and a projected growth of 25% over the next 2. Even despite this kind of growth, the index is actually at a 15-year low from a valuation point of view. So yes, the markets have rebounded in the last 2 years, but that's true with almost every market globally. We don't think necessarily that that's a bad thing. I think clearly there is a fair amount of earnings momentum. There is a fair amount of price momentum, and we want investors in India to be able to get access to the best in class companies that are listed on the NASDAQ.
So Nitin, in that light, do you expect IT sector in the US to outperform, and what impact do you see it having on the Indian IT stocks?
I think clearly, if you see in the last 12 months, one of the most surprising performances in the Indian markets have come from the IT sector. Clearly, there is a fairly strong global macro call, which is overweight on technology. The NASDAQ 100 represents 60% of that, because there is another 40% that is non-technology in the index. But clearly, the global macro environment at this point in time, with the recovery in global spending from both businesses and consumers, and the fact that the recovery seems to be broad-based, I think technology actually is a good place to be in, because there are large parts of technology that will play out in the infrastructure build-out. There are large parts of it which are consumer tech, and the NASDAQ actually represents all of them put together.
How will you manage the currency risk in this, Nitin?
Actually, we are not managing the currency risk at all. By definition, a large part of diversification comes from being diversified across asset classes. This is, the correlation of the NASDAQ 100 with the Nifty is the lowest that Nifty has with any other major market in the world, at 29%. So any investor who's buying into the NASDAQ 100 ETF is getting exposed to the US dollar, and the source of returns will be the source of US dollar returns compared to the local currency, as well as the stock price performance of these 100 companies on the NASDAQ.
Nitin, how has been the performance of your M50, the Nifty fund? I mean, how much money are you managing in that scheme right now?
I think it's a little upwards of about 200 crores. We obviously raised 235 in the NFO. Markets are a little pretty much flat since then, and we've had a fairly good liquidity on the ETF in the markets as well. So I think it's done well. We have another 150 odd crores in the mid-cap ETF that we launched in January this year. So that makes it 2 Indian products, and now this is our first global product.
Nitin, why a NASDAQ 100 ETF? Why not a Dow 30 ETF or S&P 500 ETF, which are more diversified, more broad-based?
I think good question. We evaluated that very closely. In fact, as you're aware, we also have a filing pending with SEBI on the S&P 500 ETF. But I think the reason we started with NASDAQ is the following. Purely based on the earnings momentum that we've seen in these companies, the fact that these are global innovation leaders, the fact that these are brand names that every Indian consumer carries in their pockets, whether it's iPhone from Apple, or BlackBerry, or Google, or Microsoft, or Yahoo. I think most of these names are very well recognized. And as I mentioned, there's been a 20.6% earnings growth. By definition, this index has no banking sector exposure. So from that point of view, from a global macro perspective, this looks like a better investment product for the Indian investors to start with. But having said that, as I said, I think we are looking at other products, and we'll definitely be bringing some of them to market as well.
In simple terms, Nitin, explain the mechanism for us. How will the ETF work? Is there a token size? And ETFs, obviously you don't have a lock in there then.
Sure, absolutely. So the ETF, during the NFO, the minimum investment size is 10,000 rupees. The NFO is opening on the 16th and will close on the 23rd. Post which we will take all the corpus that we have collected and invest it in the US markets on the day of the allotment. Once the units are allotted, the NFO will be listed on both the Indian exchanges, BSE and NSE. The investors can then obviously buy and sell on the exchange. There is a wholesale lot for anybody to issue directly with the AMC, and that wholesale lot is 100,000 units or 1 lakh shares, which roughly will translate into about 1 crore. For those wholesale orders that come to us, we will queue them up and execute them at the opening of the NASDAQ overnight. The units will be listed in local currency, so we'll display the NAV in local currency on an ongoing basis, on real-time intraday. The NAV will obviously have the closing prices from NASDAQ overnight, plus the currency movement during the day. But keep in mind that the NASDAQ futures actually trade 24 hours a day on Globex, so investors can actually benchmark the ETF movement, price movement using the NASDAQ 100 futures, and that becomes a price discovery mechanism as well. So clearly, the minimum lot you can buy during the NFO is 10,000 rupees. After the NFO, it's 1 unit. We expect the unit to be listed at about 105 rupees a share. And as you said, there is no entry or exit load either.
And very quickly, are ETFs tax efficient, or they also attract 10% or 15% capital gain tax?
So domestic equity market, so it really depends on what the underlying assets are in the ETF. So for the Indian equity ETFs like M50 or M100 or Nifty ETFs, the taxation is the same as that of a stock. So they attract STT, but no long term and 15% short term. For this ETF, since we are investing in assets other than Indian equity, the taxation will be akin to of an asset other than equity, which is effectively long term capital gains with the benefit of indexation. Hence, one of our objectives was to actually make the allotment before the end of the month, which is March 31st, and make it eligible for double indexation.
All right, Nitin, good luck, good innovation for our viewers. If you want to participate in RIM, Apple, or maybe Google or Facebook, whenever it's listed, this is the ETF to buy.